All right, well, a massive change is coming to financial markets in 2021 when LIBOR will be phased out. So what options might investors have for re-benchmarking? Well, just about everything. Ameribor may be a solution. Ameribor is offered by the American Financial Exchange, and its CEO, Richard Sandor, joins us now to discuss. Brian Chung also stopping by for the conversation. So, Richard, I guess let's just start with, what is Ameribor? What do we need to know about this benchmark that I think many of us may not have heard of before?
It's a weighted average of interbank lending that occurs in a given day. We have 127 regional and mid-sized banks and 1,000 community banks. So it's really a market-based benchmark, which LIBOR was not.
So Richard, LIBOR, it's going away in 2021. It's been, basically scandal-ridden in the past few years, which is a reason why it's being phased out. For those that aren't familiar, it's a key transmission mechanism for, central banks to kind of get their interest rate targets out there. It's also used to benchmark instruments like swaps and also collateralized loan obligations and whatnot. Now, you serve mostly community banks, is that correct? Why is that? And, how is that different than maybe what the Fed is proposing as its own alternative?
Two things. We represent regional, mid-sized community, and what distinguishes us and why we started this venture is it was amazing to me in 2011 when the scandals broke that America, the world's largest economy, did not have its own benchmark. How could it be that a $20 trillion economy was having rates set in London by 18 banks calling each other?
Yeah, now that you explain it that way, it does seem ludicrous.
It's ludicrous. And so we trademarked Ameribor, we filed for a patent and said, let's get an American-based benchmark, and one that's not a poll. Remember, LIBOR was like electing the U.S. president by a Wall Street Journal poll, okay, as opposed to having an election. You had 300 million a day trading that called for pricing on $200 trillion based on 300 million and a poll.
But Brian says the Fed has an option?
The Fed has an option, and we're different from the Fed.
Yeah.
The Fed's option is a risk-free rate. It's based on the repo market. It's collateralized by government securities. Ameribor is an overnight unsecured rate, so it's got a credit alternative and really represents not the yield on government securities, but the yield on borrowing and lending on an unsecured way. And that's how most lending occurs to auto dealers, to corporates. It's all unsecured.
So how do you get more people using this? Like, how does Ameribor become something that rolls off the tongue like LIBOR?
Or can you have both yours and the Fed? I mean, how's this going to play out? Are you going to win?
Two things. Yes. Unambiguously, yes. We love to compete. I hate to lose. It's just not a good feeling. And so there's two things. You get more slowly to the extent I'm a serial inventor. I've gotten it wrong a lot, and I've gotten it right sometimes, and get blamed for inventing financial futures and emissions trading and things like that. It's a decade process. It took me a decade in the 70s and 80s to get Treasury bond futures off the ground. It took me 10 years to Kyoto and forward to get an emissions trading market in Europe. We started in 2011. We said it would take a decade. In 2021, we should become a teenager or a young adult. It's a matter of, I used to go to Paris and London and Singapore and all over the world to sell emissions trading.
Why don't you call it carbon trading? Why do you call it emissions and not carbon?
Because there's SO2, which is acid rain. So there are very...
More than just carbon.
It's an umbrella,
It's an umbrella for all pollutants, airborne or otherwise. So it's a matter of building it brick by brick. And to whatever small extent we have proven the concept is because We're in Tupelo, Mississippi, Bentonville, Arkansas. I can tell your viewers where they get the best pulled pork in America. It's a gas station in Kansas City. Yeah.
There's a time, sensitivity to this because LIBOR is going to stop being published in 2021, so regulators say. So what's your pitch to companies right now in saying we need to start indexing your instruments to things that are not LIBOR?
Well, we started in 2011. Everybody said, go back to Chicago. We don't need it. LIBOR is going to be here forever. We have zero interest rates. There's no need to plan for everything. In the same way, the journalism schools didn't start using PCs until well after 75. It took 5-10 years.
Oh, yeah.
And all innovation, industrial inventive activity, financial inventive activity, interest rate swaps, financial futures, junk bonds, mortgage-backed securities have a 10-year gestation period. Markets have to be built. They're not like spontaneous combustion. And this means educating the accountants, educating the lawyers, educating the treasurers, educating the ALCO committees, going to academic conferences, having it introduced in MBA programs, speaking to 23-year-old graduate students who by the time they're practicing, they've learned about it in college.
It's exhausting.
That's a lot, yeah.
A lot of work.
All right, we'll see how the process plays out. In 2021, Richard Sandor, CEO of the American Financial Exchange. Thanks for joining us.